What's up, all you cool cats? I want to quickly take the time to say I could discuss what occurred with Donald Trump and try to get views, but that's not the focus of my channel, and I'll be the first to admit that I'm not the most qualified to determine how that may affect the markets anyway. So, what I will say is that what occurred was absolutely unacceptable, and I pray it never happens again. So, God bless Donald Trump and our elected leaders, and God bless the USA. And let's go ahead and get into the big picture. All right, so big picture, I'm getting this data from investing.com. We've got multiple economic numbers that are coming out. Papa Powell is going to be speaking on Monday. We've got retail sales coming out on Tuesday. We have for the Eurozone, we've actually got CPI year over year coming out, and that's important because the European Central Bank is going to be coming out with their interest rate decision on Thursday. That's a really big deal because that's going to affect the dollar, and the dollar definitely has a strong effect on the markets. And then, of course, we've got, initial jobless claims. One could argue it's not as important as continuing claims, but that's coming out. And then we've got the Philadelphia Fed Manufacturing Index as well on Thursday. All right, so let's kick things off with the Dixie. In order to know what the markets are going to do, you kind of need to know what the dollar is going to be doing, as well as multiple other things. So we'll start here. Again, we've got this bit of this wedge pattern that appears to have formed into this support area, and this is the potential breakout target for that. Now we can actually see if this lower support line in yellow were to get broken. If this were to come down a little bit further, this may create a separate kind of sloping a support line that could actually cause this to be a falling wedge, which if that happens, that's still a bullish breakout pattern. Then if we switch over to the daily time frame, we can see that the dollar actually is below the 200 simple moving average and below the 100. So it's definitely showing some bearish signs. But what I'd point out before is we still have this what looks like a falling wedge pattern, and this still could be considered a breakout and retest of that greater pattern. And then on the weekly time frame, again, we're still above the 200 simple moving average. We are, below all the other main moving averages though. But the main thing I want you to pay attention to is this main support line. And I want you to see just how significant this is for the dollar. So this is going back all the way to like 2002. We bounced down, bounced off of it, finally broke below, didn't even come back to retest it for quite some time, hit it, rejected, hit it, rejected, finally got bullish enough to break above it, and right now we are basically sitting right on it. So if we break below this again, it is very, very bearish for the dollar, but if we use this as support, we could see the dollar continue to come back up, bounce, rally, and you know what that's going to do to the markets. The markets will bleed. If we somehow did break below this main support line, we also have this previous resistance line, which could act as support. And if that were to break, we could see potentially the dollar come all the way down to like 95.16, between like 95.60, 95.70, somewhere in that range. So next up, we've got the VIX. We had pointed out this wedge pattern that was coming down into this major support line. We got this initial breakout and it rejected because we had this previous ascending channel support now acting as resistance, and fear rejected off of that. But what I want you to see and what I want you to keep in mind is how close we are to this support line, and I want you to zoom out so we can really see this. So on a big time frame, we have a megaphone pattern resistance here, and we also have a much bigger megaphone pattern resistance here. We could see, this is going back to like 2023. We had a lot of volatility going on. Volatility got squeezed significantly as we were seeing the markets just go up, 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 up. But this resistance line as a whole has kept its resilience for keeping fear down. So if we were to finally get a breakout in fear, we could actually see the VIX potentially come up to about 25, 26. And if we got the big breakout, it could come all the way up to like 39, 40, which would just be insane. And zooming out here on the daily, we can see these patterns, in all of their glory, so to speak. And look at the TTM squeeze, what happened every time. We squeezed, we broke out. We hit resistance, pulled back, hit support, bounced again. This time we were squeezing and we shot to the downside. And we had a lot of squeezing and volatility here. We were going up and down and up and down and up and down. We were squeezing again, bounced off of support, shot up here, actually broke above this just briefly to about 21, came back down. Now check this out. We're at this main support line again, and the VIX has been squeezing for weeks now. So, if we aren't going down, that only leaves up. And I mean, I could definitely see the market taking a hit here shortly, and who knows what the catalyst exactly is going to be, but the technicals are indicating that this wants to break out to the upside for sure. So as I had pointed out before, we had some coiling that was going on the ADD, again, which is like the advanced decline line. It measures moves for the whole market. And I had said we're expecting a big breakout, and we got it. But remember in my last video, I pointed out this rising wedge pattern. Rising wedges are bearish breakdown patterns. And look what happened near the end of the day on Friday. We got that big sell-off on SPY. We got the big sell-off here. What is the ADD saying now? Well, we've got bullish divergence. And again, this is on the 30-minute time frame. We've got bullish divergence and a bit of a basing pattern. But so at least for now, this is kind of indicating that the market wants to go back up, at least short term. So I've been trying to clean my charts up a little bit so that they're easier to follow along with. So if you like the way that I've cleaned them up and you think it's easier to follow along, please make sure to tap that like button. It costs you nothing. It helps me so much. All right, for the overall market, I'm actually going to start with the futures. So we were following along with this ascending channel. We got so bullish, we broke out of it, got a little bit above there, rejected, came back down, got back inside the channel. You see what's going on. And so when we got up here, we sold off, but look at what the RSI did. We got into oversold territory so quickly, and then we had a period of consolidation. That's why we had this secondary breakout. But look what's going on now. I've got these two areas highlighted. If this ends up being a double top, we will see a sell-off, at least on the short term. And accompanying that is this bearish divergence, which obviously we've already seen a bit of a sell-off here. But if we get below this ascending channel support and we get below this main resistance line again, and I'll go over that big pattern here in just a second. If we get below that, we could most definitely see a sell-off. All right, so we've zoomed out to the daily time frame again. If you've missed this, I wanted to just quickly point out again, we've got this massive rising wedge pattern on the overall market. And then we also had this previous cup and handle pattern. I want to switch to the daily 5 year, so you have to zoom way out to see this big old cup and handle pattern, which was targeting potentially even around 58.50 on the futures. We could still potentially see it go up there in like a blow off top scenario, but if we don't, we're still targeting around 4,700 for the futures. I went over these in my very first video called When Crash, which is linked above. And I also went over how somebody could make money with this and how much money they could make. So I won't stay here too long, but I wanted to switch over to the chart for SPY. This is on the 2-hour time frame. Same thing. We were following this this ascending channel for a while. We kind of broke down below it, hit support, broke back into it, broke down again. We've been all over the place. But the main thing is right now we do appear to be rejecting off of what used to be support for this ascending channel. So I've switched out to the daily time frame here, and I've actually put on what's called a volume profile. This shows overall volume for each of these levels, and there's something called the point of control, which is where the most volume has occurred, and that's occurred somewhere around 395, 396. You can see as we've gotten higher and higher and higher, volume has just essentially dropped off, and you can really see this when you zoom out to the weekly time frame. Check this out. Volume is paper thin, which is just much more credibility to the fact that this really could be a giant rising wedge pattern that is signaling a soon-to-be market crash. So if you think I'm crazy for trying to call a market top and saying that technicals can show you and lead the way, I want to get into the Mag 7 and show you each of those charts so you can see this is what is actually supporting this whole thesis. All right, so we're looking at big picture. This is on the weekly time frame for NVIDIA. I pointed out that we've got this big rising wedge, and this is the pattern target. See how that zooms in, zooms out. If we get a breakdown soon, we could actually see an NVIDIA that is targeting somewhere around $41.50, $42, split adjusted. And then we've also got this bearish divergence on the weekly time frame for this. Get a load of Microsoft, same thing. Look at the weekly. Massive rising wedge pattern, which seems to be targeting around 348, 340, 350-ish. Like that is a big breakdown for such a mega cap company. All right, now we're taking a look at Amazon. This is on the daily, the 5-year time frame. We had this main support line, main resistance line, a lot of bouncing around going on. The pattern target for this, if this is to be treated as a rising wedge as well, is targeting around like 154, 155. This is something that I covered in my mega cap poised for crash video, which is linked above. I want to just quickly zoom into the 2-hour time frame and reiterate. We pointed out this rising wedge pattern and we got the expected breakdown. So these patterns, they do play out as expected. All right, we've hopped over to the chart of Meta. This is on the weekly time frame. You can see very clearly it's been respecting this ascending channel, and we're at support for that ascending channel right now. So this potentially could be a very good buying opportunity if it treats this as support. But if it breaks, let's switch on down to the daily time frame so you can see this. We still have this daily gap that got partially filled, but not completely. So if this channel were to finally break, we could potentially see Meta coming all the way down to like 400. All right, we are switching over to the weekly chart for Apple. We got some higher time frame things going on here. We have this resistance line that's not been broken yet and a support line here. If this were to be treated like another rising wedge pattern, this is the pattern breakdown target, which is around 125. And you can see even visually, this was, kind of like a support before, but we could also see price come all the way up to like 310-ish, 310, 315, give or take, before the actual sell-off. And you got to keep in mind, these patterns, sometimes they don't have to go all the way to the apex before the breakdown occurs. If we started getting some of the other big mega cap names selling off, we could definitely see bearishness in the overall market, and then we could see this coming down as well. And if we zoom on into the daily time frame, look what we've got here. We have a pronounced rising wedge pattern. So even if the bigger time frame stuff doesn't play out for quite some time, what's happening very soon, and it's very likely, we're going to probably see Apple hit around like 200 a share, which could be a great buying opportunity if it were to continue going on up. But I think this is what it's targeting for now. So now we're looking at this daily chart for Google. We had the support line that was coming up. We can see bounce, 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 came up strongly, bounced again, bounce, bounce. Now we're kind of doing this consolidation thing where the market can't seem to figure out, does it want to go up, does it want to go down? I had pointed out before, we had this symmetrical triangle. We had the breakout target here. We broke out, we actually got above it. And then we had a rising wedge sort of loose pattern there where we did get a minor sell off and we came back up. Now we're below this support line. So if this were to start acting as resistance, we could definitely see bearishness coming into Google. And when we zoom out, we can see we had this big resistance line for Google. It hadn't been broken for a while. We finally got above it, treated it as support when we had this main support line here. But if this were also to be treated like a rising wedge pattern with a false breakout, the pattern target breakdown for that, if it were to come down soon, would be around like 124 to 120 a share. And then last but not least of the Mag 7, it was not part of them for a while there, but we had this massive symmetrical triangle pattern. We had what appears to now have been a false breakdown. And if you take a measured move from here to here, and we do it from the basing pattern here for Tesla, it's now potentially targeting like 370, 367, around that area. Of course, we had a pretty solid rejection here, and based on what I'm seeing on the RSI, I would consider that this looks like it wants to continue down further, but this could just potentially be retesting lower support levels, which could potentially take it higher. It's going to have to break out above this resistance now, and we can see this previous support line was acting as resistance now. We've got to get above that, but if we could get above it, and again, my charts are on a log scale, if we can get above that, we might actually be targeting that higher level there. If not, we could just continue on down, but we won't know until we see more price action. And I wanted to just briefly cover the RSP, which is the equal weighted S&P 500. We can see it's pretty bullish. Even when the market has been selling off, it's been very bullish. And then as well as the IWM for the small caps, it's been exceptionally bullish. And I think what it's showing is we're potentially getting a rotation out of tech, out of big tech specifically, into small caps and other names. And if that were to continue to happen, we're going to see money coming out of big tech. But if money comes out of big tech too quickly, we could see the market come down, because it's the Mag 7 that has led the entire market up, whereas all the other companies just have not really been doing that well. We are about to get into the requested ticker for the day. Just a reminder that all you have to do is leave a comment below with a ticker of your choice, and I'll do an analysis on up to 3 per video and post the results. And if you haven't subscribed and tapped that notification bell, you're going to completely miss it. So if you don't want to miss it, click it. All right, so the requested ticker for the day is ATER for Ethereum Incorporated. And we can see we have the main resistance line up here for the all-time high, all-time low, multiple support and resistance lines throughout this. And check this out. We have what looks to be a falling wedge pattern. It's pretty clear. Had a little bit of a false breakout there and we came back down, but look at the pattern target for this baby. I mean, this thing is targeting like 227 to 230 per share, and that happens to have confluence with a previous resistance level. So I want to look at this through multiple lenses, and I want to throw up an Ichimoku cloud. And so let's take a look at this. We can see we have developed so much resistance along the way. Again, this is on the weekly time frame. We would have to get through this resistance to see any real upside. And I suspect that we're going to start seeing some real resistance and price action when we get to around 350 to 4. If price could break above this like $5 to $6 level, probably 5 being the main one, because it's that key psychological level, we could potentially start to see like a short squeeze. And if we also throw up the volume profile, we can see where the point of control for that is. That's around like 50, which is also another key psychological level. So if we got up there, I think we could see probably a pretty strong rejection if we got all the way up there, and then possibly we could see this $25 level acting as support, carrying us all the way, potentially all the way up to like 220, possibly even higher. Now I've switched over to the daily time frame with the Ichimoku cloud on here again. You can see currently price got up into this resistance area, sold off only a little bit because we got some bullish support here. Got back up in here. We had this kind of this rejection wick on this candle. But if price can get above, where is this? This is about $2.88 to $3, you know, 3 even. Let's call it 3 even for that key psychological level. And if we see it get above this price level, we could potentially see this start to short squeeze. Of course, there's a lot of resistance along the way. There's going to be a lot of bag holders that have possibly just been waiting to sell. But one thing that you want to look for if you're trying to figure out how much resistance there's going to be is where are these huge volume spikes? Where are people capitulating? We had a big spike here. So one could consider and wonder if people have actually finally felt the pain of multiple years of holding on to this stuff and finally sold. If the last bag holder is out, then the short squeeze could definitely be on. And if you're looking at this thinking, oh man, you're kind of crazy, I want you to take a look at this. This is something I predicted before it actually broke out. And this is the weekly chart of GME. This pattern was targeting around 80. And where did we actually hit? We actually hit a high of close to 80. Of course, this was like in extended hours, but we hit that pattern target, and that was based purely on the technicals. So if what happened on GME happens to ATER, kind of makes you wonder if it is a definite possibility. And on that note, make sure you don't leave without getting today's trading rule to live by.